Dasha, walk us through this. We're seeing red on the screen. Are the markets just disappointed by the pick? What's the thinking here?
I don't think that the markets are disappointed by the pick, although it is interesting. It's an internal candidate, and I think the feeling was they couldn't go for an external one because Schneider was external, came from a healthcare company, and actually his healthcare bets within Nestle really haven't paid off. So they've gone for someone who is more in the image of the CEO before, Paul Bulcke, who is now chairman, including a sort of a background in Latin America and a fascination with that region. I think probably the markets are disappointed because of the uncertainty of what happens to targets now, what's the strategy, and the management wouldn't be drawn on that. They just said, you've got to wait for the capital markets day, which to me really sounded like there will be shifts because, you know, the guy's been on the executive committee for 16 years. He knows whether the targets are achievable or not. He knows by now, so why not? Just has a sense for it, even if they haven't, you know, if they'd done the formal analysis and decided that they were being cut, then they'd have to announce it.
So what is the market, why is the market down? This is what we're trying to understand this morning. Is it an anticipation that we do get cuts, and those cuts could be quite significant? But as you say, he's an internal candidate, so why would he change the cuts? I'm genuinely confused here as to why the stock is down. The commentary on the call this morning seemed to suggest, as you say, the capital markets day is going to be the moment that happens. Is that I can't work out if that's a good thing or a bad thing. A realistic assessment of where this company is right now is one thing. A change in strategy is completely different. I'm trying to understand the difference here.
I don't think there'll be a change in strategy, but I think there'll be a change in targets, probably. And that's what, reading between the lines, it sounds like it is coming. And I think that's the main, on the operating margin target, which, you know, they're trying to grow. And of course, there's this balance between reinvesting in brands and having the money to do that, whilst also keeping profitability high, which is particularly important when you're struggling to grow the top line. And I think it's that balance that they're going to look for. And like every CEO in the consumer space says, we're going to really focus on cost, and we're going to then reinvest in our brands. But in practice, how that works, especially with someone who's been supposedly helping Nestle do that in his current role, it's all that uncertainty that the company wouldn't really be drawn on. And I think I was also surprised. I actually think, you know, this isn't a situation where someone was like, you know, on their way out for months and then eventually the company gave in. I think despite there having been 4 quarters of missed guidance, there was still some goodwill amongst some analysts and investors, and a lot of respect for Schneider. So I think that also adds to the uncertainty. And if you contrast it with when the Starbucks chief executive was ousted just last week, and there was a massively positive share price reaction. You know, Schneider has more of a track record.